All right, welcome traders. It is Friday, June 6th, 2025. Quick wrap up for the week. We had a fantastic week trading, one of the best weeks ever from a trading standpoint. So, great week this week. We're finding trades in a lot of unusual places right now, but really, really good stuff. I'm going to show you some charts, some trade ideas. I'm going to show you the trades we put on today, show you the trades we closed this week so you can get a sense of exactly what it is we're doing in in our accounts. Small account has been just absolutely on fire. I'll show you the small account. We'll show you what's going on in the investing accounts as well. So a big wrap up session here for you today. I think you're going to like a lot of what you see here from at least an idea standpoint. You can see how we're doing. You can see what I'm doing. Okay, and maybe you'll get some ideas out of this. I hope so. And then we'll jump into the main trading account, talk a little bit about synthetics versus owning the stock when it comes to either writing calls or making some trades. So I'll give you a little bit of an update on how we're doing that as well, and what kind of strategies and trades I'm looking at. And I wanted to start before I jump into that and go through something that I actually went over with members a bit today as well. And you know that I typically don't like stocks, right? So everybody knows that. I've made no bones about that on the YouTube videos. And if you're in our Discord, like I said, on top of the YouTube, you know that I really just hate stocks. I really do. Most stocks hate. Okay. However, from an investment standpoint, not a trading standpoint, there are a couple that I will get into from a little bit longer term standpoint, but there's only about 12 stocks that I will typically ever even consider investing in, and hardly any right now. And then there's maybe another 5 to 10 stocks that I will look at for potential trade opportunities. But here's what's happening right now, and I let people know this today. Uh, why do I have a few more stock trades? And I'm looking at my trades right now. I've got one, two, three, four, five, six stocks that I have trades on, which is for me unusually high. I really don't like trading most stocks. I love futures. I love indexes. I love ETFs. Okay, that's really where I would rather be. I don't love individual stocks. Tesla, great example of that this week. I wasn't in Tesla. I'm not in Tesla at all. But it's a great example. What happened this week? Was it earnings related? No. Was it fundamentals related? No. Okay. Elon and the Donald had a falling out, as I think everyone on planet Earth expected to happen. Did some expect it to last this long? Did some expect it to last a little longer? I don't know. Probably a pretty good amount that it would last 6 months. And that's about what, what it lasted here. If you really thought that there wasn't going to be a butting of the heads eventually with this president, and again, I'm not being political at all, and I'm supportive of many of the things that he does, but with this president, you're going to butt heads at some point. Everybody does. It happens. And I think Elon was 1 million% correct in calling out uh, everything that he did in the bill. I think the bill's a ridiculous bill out there. If the U.S. doesn't get spending under control, we're all going to be in a massive, massive problem. We've got to control our debt and our spending and get those reduced. That was Elon's job. I don't know that Doge or Elon did as much as we were hoping that maybe they could do of cutting some of the fat out of the government. I think there's probably a ton of waste there. Both parties, doesn't matter. Both parties sends these bills and raises the debt ceiling and just prints money. And eventually it's going to come home to roost. And we're all going to suffer because of it. However, that all aside, you knew that was probably coming. This is why I hate stocks. Uh, UNH, look at what happened there. Tesla, go on and on and on. SMCI. There's always a shoe to drop somewhere. Nvidia, when the DeepSeek stuff came out. I mean, there's always potential news that can affect a single stock and knock it down 10, 20, 15% or whatever and cause you major problems. Rarely would that happen in an index. If the S&P went down 15% in a day, okay, we'd all be scrambling for cover. But if Nvidia went down 10% in a day, it's a bad day. All right, so uh, we don't want that to happen, and so why I stick around from stocks. However, let me just cover really quick. Number one, I'm still in multiple futures trades. My number one strategy is still the 112, the calendarized version on ES futures. I've got two of those tranches on right now. The others have come off for profits. So this I'm exactly where I want to be on those. I've also got my 120-day naked puts on in ES, so those are fine. I've also got a covered strangle working in ES futures. So all of those trades are still on. So I'm still trading my futures. That's my number one strategy. Number two, uh, I've got trades on in oil. I've got 112s. I've got strangles. I've got trades on in gold. I've got 112s. I've got strangles. So, and those are all futures. So I'm in ES, I'm in GC, I'm in CL, I'm in the futures, but I still have some cash based upon where things are right now. And I've managed to keep my buying power down. It's starting to creep up a bit. So I just got to keep an eye on it right now. But I feel that the indexes are a bit overbought. So I really don't want to jump into a lot of the indexes. I'm not adding to my SPY and QQQ right now. I do have poor man covered calls on those. I've been writing calls, and you know that I love the at the money or even in the money covered calls on those. I'm not interested in price appreciation. That's for my investing portfolio. This is my trading portfolio I'm talking about, and I want the cash. Okay, I want the extrinsic value that I can get out of it. So I'm in it for the premium. I'm in it for the time value. I want to generate cash flow in my account. That's what I use my SPY uh, and QQQs for. And I'm going to share with you how those trades are doing, even though we're going up and up and up and up. And you're thinking, oh, Tom, your covered calls are just getting breached and you're losing money on them. Let's see how we're doing. All right. I'm still getting all of my extrinsic. I'm getting that time value out. I'm totally happy with it. I'm a trader. I'm not an investor in this account. Totally different things. Okay. Investing account, 70% of your assets. Don't do risky things with those. Okay. Longer term, eye on the future. 30% of maybe all of your capital can be in your trading account. 30%. Okay. It's risky. We go up, we go down. We make 60% in one year, we lose 40% in one year. We make 100% in one year, we lose 20% in one year. We make 30% in one year, we lose 2% in one year. Okay, it's going to move up and down there, but overall, we've been doing great. Well, we've moved that account from $30,000 all the way up to a little over, pretty close to 300,000 now in about a 5-year span. So we're doing pretty well, despite some setbacks and some losses. You're going to have those as traders, but I'm good with that. But anyway, I feel the indexes are overbought, so I don't really want to go there. So I'm looking at alternative trades because I have the opportunity. I'm not seeing it in the futures, but I've already got futures trades on, so I'm not seeing it in additional futures trades. Don't want to add more risk there. So I've jumped into a handful of stock trades. And I'm a trader and I want to make money, and that's the goal here. So I don't think it'll continue that I'm going to have 5 or 6 stock trades on at any given time. Maybe we'll have 1 or 2 most of the time. And there's 2 ETFs that I trade. I don't count these in those, but it's IBIT, which is Bitcoin, and I'm a big Bitcoin supporter. And I also consider MSTR, MicroStrategy, or Strategy as it's known. I also consider that a leveraged ETF. Okay, so it's not a stock, it's not a software stock. These guys buy Bitcoin. They're using a leveraged product to attain it. It's probably a 2x, 3x Bitcoin levered play out there. So there's definitely some risk in there, but I think there's opportunities to be had in that play. And then also, I do like Berkshire Hathaway, which I'm not in right now, which I can also consider to be somewhat of an ETF and not just a stock, since these are mainly holding companies for other assets. All right. But so I doubt it's going to continue. I have some stocks in there. I'm going to continue doing it if I see opportunities. And right now, there's a bunch. So I'm going to jump into some trade opportunities here. And then we'll get into our accounts, share with you exactly what's going on. So I hope this makes a lot of sense to you. and let's keep it rolling and get you through some of this stuff. Let me get off video here, as you can see, and we'll keep rocking and rolling. All right, let's take a look at what happened with SPY here. We're just inching towards these new highs. There's a gap to be filled. We haven't come down to fill that gap. Possibility still exists. The 50 is about to cross the 200 to the upside, so the golden cross is about to happen, wiping out this death cross from back here, breaking through this support level, previous resistance level that we had before. And even though we're heading towards the top of the Bollinger Bands, it still looks pretty decent, but we're getting to that upper end of the Bollinger Bands, which are getting really tight. And I don't want to keep pounding and getting long there. All right, so there's SPY. Before we jump into anything else, we'll look at the US dollar. Again, it's been trying to just hold this level down here. There's not a really great crisp level, but I think this one gives you a pretty good sense right in here, right around this $98 and change level on the US dollar. So I think if we continue uh, holding this, it's not bad overall. If we take a look at bonds, bond yields had a pretty good jump today, which would drive bonds down. I don't think bond yields are done going up yet. I don't think bonds are done going down yet. So if we're looking at TLT, you can see, we've had this downtrend overall. We couldn't really make higher highs necessarily. We tried some higher high, higher low actions, not really panning out. I think bonds still don't look good, which is why I'm not putting on a lot of ZB trades. And I have had some TLT trades like a strangle because I don't think we're going to rock it up on TLT. And if we fall down here past the 80, probably the 83 mark here, which is the previous recent lows, I would be okay with some assignment down in here. But I think the bond vigilantes are not done. I don't think bonds are done going down. All right. There's bonds. Real quick look at VIX. It's pretty much back to being a dead piece. So there's not much volatility in the market, despite the daily rantings and things that are coming out from all the different countries and the tariffs and the Elons and the Trumps and go on and on and on with people. We're down pretty low. All right, let's just jump through things real quick. ES, we just pretty much covered that. Breaking out of this support, I'm sorry, I keep calling it support. Breaking out of this resistance area here today could bode well. Maybe we get some more follow through on that. RSI starting to get overbought. I just don't want to put a ton of capital in right now. I think there's definitely some support levels here that I think we can keep an eye on that will help us if we decide that we're going to pull back. A couple here. All right, oil. Oil's been on a pretty good move since back here on May 5th. Oil's been moving its way higher, breaking through the 50 today, breaking through the top of the Bollinger Band. Now we're getting to this downtrend line and this previous resistance level here. So we have a couple things to break. If oil, breaks those, we'll reevaluate where we are. Maybe now we have because it looks like, at least for now, this is a higher high. After this high, higher low, higher high. If we have another higher low on that pullback, might be interesting to see where oil is going. I just don't see a reason or catalyst for it to rocket super high, but we'll see. We'll keep an eye on oil, but this is why a 112 trade here, I think it's a perfect trade. No risk to the upside, and if you get a little bit of a pullback, we're still okay, and maybe even make more money if we drop into the trap. All right, gold. With the markets moving up today, gold peeling back. This is a bit of a resistance level up here on gold and breaking this real short uptrend line here. So we just continue to maintain this trading range for gold. I don't see a catalyst to send gold significantly lower. I really just don't see what would do that. I think any pullback is an opportunity. Anytime you get back to the 50 or this trend line, I think this is an opportunity to get long gold. We are in gold with a 112 trade. It's up 72%. We're also in there with a strangle, which I did not take off, which is over 50%. So I got to get that done here very soon. Uh, Actually, we should actually look to see if we can even get out of this thing. Um, Over the weekend, maybe. We'll see. But if not, we'll take it. All right. And then bonds, I already mentioned, pretty weak down here. I really don't want to trade much on bonds. I still think there's a bit of a floor, but I don't know where that is. I don't want to trade futures. So I'll keep playing with TLT for now because I am okay taking assignment, potentially wheeling out of it. Right, copper had a nice little move higher, settling back down a little bit today. Still not a bad strangle opportunity or a 112 opportunity. Silver, though, really taking off. This blowing to the upside. Bullish plays too far gone for me. I'm not going to do anything with that. RTY, I've been talking about this as a strangle trade, and it's been pretty flat. All right, on the Aussie dollar as well, a little bit of a slow move to the upside. Not a bad strangle trade with the US dollar getting a little bit of a rebound. I would expect this thing to really just hold this level. Really tight Bollinger Bands, really tight in here. Can it break? We'll see. Maybe it breaks to the upside. Uh, I'm staying just out of those things. All right, let's just run through a couple stocks really quick. Amazon, we've been talking about this. We had this ascending triangle. It broke through it to the upside, top of the Bollinger Band here. We'll see what happens, but Amazon looks really, really good here. Getting overbought, but I think it could give you a little bit more of a run. It could stay overbought for a little period of time. I think it's a short-term good trade. If not, I don't want to get in and do anything at least long-term on it right now. Nvidia, top of this uh, resistance level, getting to the top of the Bollinger Band as well, which is starting to curl over. Not extraordinarily great here. I'd love to see a pullback in either one of these. Hood is my favorite right now. This is what's really propelling the small account. Um, we're in pretty good shape on Hood with a bunch of shares, a couple hundred shares in our small account. And even though we're writing calls that keep going in the money, the underlying keeps going up. So I'm making the extrinsic. I'm 1 for 1 with the intrinsic calls and the intrinsic on the leaps. Actually, not quite 1 for 1. I get a better bang on the leaps than I do the calls. So we're making really good money on this. There's nowhere to get in on Hood at this point. I would be holding off. Palantir, this looked like rolling over. It did come down, find some support right off of this level, and then got a little bit of a bounce today. I'd love to see this thing pull back a little bit more to that 110-ish, 113 level down here at the 50. That would maybe give me a reason to get in, but you can see this cup and handle that we had really didn't materialize. It still can. Okay, so it still could potentially do that in here. Let's see if we can get above this level and get going. Uh, Maybe. Google, ascending triangle, breaking out. It's got some overhead resistance here. Maybe it gets a little bit more of a move. Tesla. Everybody wanted to get in. Yes. Oh, this is a deal of the century. I don't know that it is. Tesla's got problems out there, and the problems don't all start with Trump. All right. So, yes, he called out Elon. Yeah, they're a little lovers' quarrel there for now. We'll see if things get squared away, but I don't know that this isn't much more than a little bit of a dead cat bounce. I think you got to give it a little bit of time. But what we did today, and I posted it in Twitter, was I actually went in with a strangle because A, I'm not ultra bullish and going to sell naked puts on this thing, and B, uh, I'm not, I'm not super bearish on it either. So I sold some calls up here in case we do get a little bit of a rise, but maybe not much, and we stay in this, a pretty good range. You've got some decent volatility, which gives you, I think, a pretty good strangle. So we went out with the 2 week strangle on that. Let's skip through most of these. Hims, I like this move. We had this breakout. It's in this essentially a bull flag that we got going here, and it looks like it wants to move to the upside. It's holding on to this 21 EMA. So I think this was not a bad opportunity for me on HIMS to take a look at selling some naked puts on it. So if we continue in this flag, do we get the breakout going to the upside on HIMS? Nice consolidation. Looks like it wants to move. and things are starting to line up for the move to the upside. So Hims we got into today with a naked put. Let's see, anything else? Uber, I really like Uber. I think this bounce here, excellent. We played this already with a short-term 112 trade. I already cashed that in today for a pretty nice winner. We can cover that trade there. And then let's skip, let's go UNH. On this move down here, I think this has been an excellent, excellent, excellent trading opportunity. Not an investing opportunity because I don't think it's all clear on UNH, but I think when you drop from 600 down here to 300 and this recent drop here, and then it meandered around and it's just kind of holding this level right now. I've been selling almost every day or every other day. I've been selling put credit spreads. We've got some members in the Discord just selling naked puts, doing fantastic on it. Right now, I hate this company. I hate it with a passion, even though I have my insurance through United Health. The insurance is fantastic. Okay. I hate this company um, as a stock. It has done nothing but bad things over time. But you can see if you go back, it really doesn't do much. It goes up, it drops down. It goes up, it drops down, and then recently it's been getting hammered. I think this is an interesting space to be in right here. I think you just keep taking advantage and writing puts against this thing out of the money. I think you can be in good shape. All right, there's UNH. Really quick, Bitcoin. This looks like a little bit of a head and shoulders or an inverse head and shoulders with a neckline right here about 100 and 100. So 100,000, 100-ish, something like that, or 101,000. I think that's a good neckline. It held today. We bounced up. We got all kinds of lines and stuff all over here. We'll take some of this off for you. I got fibs on here. There's the 50 fib down here and a previous level. It looks like a spot. If we break through here, I think we come all the way down into the $90,000 range. If it happens that we come down here, if we can bounce at one of these levels, great. I think you're going to get a great entry if we break down. If it rallies and moves higher, we'll be in good shape, which is why I got into IBIT here. Same type of thing holds. We've got some gaps to fill here, but if we can bounce off this 21 or just maintain and move higher, I actually am using IBIT as a poor man's covered call opportunity because I'm bullish long term, neutral right now. I'll write calls if we're going down against my shares just to reduce my cost basis, but I'm still bullish long term. And then MicroStrategy, which I consider just a highly levered, but a levered Bitcoin play. Nice pullback to the 50, the bounce, the consolidation here. We can still break down and head lower. Okay. And there's plenty of reasons for this thing, I think, to sell off. But if Bitcoin continues to be strong, then I think those outweigh it, and this thing continues to move sideways to higher. But the volatility on uh, MicroStrategy is lower now than it's been in a long time. But I do think that from a chart standpoint, there's some support in these areas here. You got the anchored VWAP to 50. You got this previous pivot level. You got the bottom of the Bollinger Band. I think this whole 340 to 360 level provides support, and I like it. So that's why we're in on MicroStrategy. We'll take a quick look at the accounts. I told you it'd be a lot of stuff today. Here's our open trades. You can see that there are a handful of stocks. We did put a naked put on Hims. We got a Tesla Strangle today. We also put another UNH put spread. We're sitting on a couple other UNH put spreads. We have a Shop 112. And then that's pretty much it for most of the stocks, except for a couple of these poor men's covered calls on Apple, MicroStrategy, and IBIT. Otherwise, you know, it's futures strangles, futures 112s in here, and then the ES naked puts. Closed trades. This is what we've closed so far this month. And you can see from a P&L standpoint, we are up 9,579 this month, just trading these. And our average days in trade right now, what are we looking at? Average days in trade is about 16 days in the trade for almost everything that we've got. So a lot of shorter term trades, just booking cash. There's some zero DTE winners in here, but most of these are just spec trades that I've been putting on because right now I think the setups have been excellent, excellent, excellent for us. And we've got the two poor man covered calls, one in SPY, one in QQQ. These are income calls, which means I sell them pretty close to at the money. And you can see that, you know, the covered calls, we're actually down $4,000 on the covered calls because they keep getting breached. But you can also see that we've made almost $18,000 on the increase in SPY itself. So this trade's now up almost 30% in 123 days. 30% in 123 days. I mean, we could take it off and just book your 30%. I mean, that's a pretty good trade opportunity on a pretty substantial um, amount of income. We've also done something similar on QQQ, not as many shares, but this thing's up 24% in just 52 days. Even though the covered calls at the money have been losing because of the intrinsic value, we've been taking all the extrinsic out of those. So we're making $500 a week of extrinsic, okay, which offsets part of the intrinsic that goes up. And then you've had, almost a $6,600 increase there. So just to give you a sense overall, here's what the account looks like. We had a good month last month. We booked 9,800 in realized gains. We actually went up $23,000 in net lick increase last month alone. You can see we don't really put any cash into this account. We're sitting here almost at the $300,000 level, but we started May at almost 260,000. We're at 295 today, so we're up pretty good. If you're looking at this month, we're already up 13,000 in net lick, but I really focus more on our realized. We are up just this week alone, which is the whole month so far, $9,600. It's just generating cash, and trading your way through it. If we look at the lazy trader account, you can see that we rarely close trades because this is a longer term investing account. In fact, most of these closed trades, you can see them all happening on Fridays, which is the yellow end of the weeks. Okay. End of the week is when we're booking some of our covered calls on it. But look at our net lick here, and we do, contribute to this account on occasion. But we started at 297. We're at 353 minus the 20 that we put in. So we're doing pretty well in this account as well. We're up. What is it? Technically 333. So we're up almost $35,000 or so in just about a month. And so up over 10% in a month. Last month we were up 11% in that account. And we just booked some more winners today. And then the small account, this one's been a lot of fun. We only have 3 stocks that we do poor man's covered calls on. Plus we do an MES naked put trade. But look at this thing. So from the beginning of May through today, we've actually increased the net lick without contributing nothing to this account. Okay, we've grown this account by almost $5,000 in just about a month, over almost 40 some odd percent. And you can see weekly when we're rolling our covered calls on Fridays. I mean, sometimes we're taking losses. A lot of these losses that we've had on some of these is Hood. Because Hood is just going bananas. We have Hood, Mags, and IBIT in this small account. So that's how this is going. So it just gives you a little sense of, and you can actually see the open trades here. So there's my Hood, Mags, and IBIT, and then we have just one ES naked put in there. So it gives you a little sense of what we're doing. Let's take a quick look at the major account, and we'll wrap it up for you guys because it's the weekend, and let's get out of here. Oil, 112, Strangle, both doing great. Nothing to do there. ES, here we've got a covered Strangle. This thing's up $1,100, 60% in 4 days. That thing's fine. We've got a naked put from a 112C, another naked put from a 112C, nowhere near taking those off yet, so nothing to do. We still have all of our put debit spreads because we calendarize this thing, so there's plenty of put debit spreads out there to help if the markets start to turn against us. And then there's our 120-day naked put. We take those off at 40%. Gold, we're sitting here on a 70% winner on a 112. We're sitting here on a 56% winner on the Strangle, which we really need to take off. Apple, I put this Apple trade on. I don't love it. It doesn't belong in this account. I'm going to take it out, but it is a poor man's covered call. But it's using kind of the out of the money strategy, which I don't like in my trading accounts, more for an investing account. So we'll let this thing just go for a little bit. We've already closed some of the calls, so we just keep rolling and making more money on those calls. CBOE, this is a naked put. If we got assigned, I'd be fine. I really like CBOE. We're up 61% in 17 days. Yes, it's a stock, but it's a little different in my opinion than many others. Trading volumes are up. I think CBOE is a great stock. HIMS, we just got into this today, selling some naked puts on here based upon the chart I just showed you. IBIT, we added this today as a poor man's covered call as well. So that's just brand new. MicroStrategy, we've rolled these calls already, so we're up nicely on the underlying, and we're actually up okay on the new covered call. And we already closed covered calls for a big winner today, as well as a naked put there. The QQQ, poor man's covered call, is the income version. So we're doing great on this one. Shop, still a 112. I will try to take this thing off probably next week. SPY, another poor man's covered call. Tesla, we put on a strangle today, as I outlined with you guys. So I like this strangle. If we would happen to crash all the way down to 235, I'd probably be very, very interested in taking some assignment there. We'll see what happens on that trade, but we're pretty far out of the money on both sides. And then UNH, we just keep selling put credit spread, put credit spread, put credit spread, put credit spread, and they're all doing really, really well. All right, so there's where our trades are on here. We talked a little bit about doing some synthetics, which let's just use MicroStrategy as a potential trade. If you wanted to buy the leap, maybe at 377, if I'm buying the leap to do like a poor man's covered call or owning this, but poor man's covered call, if I bought the leap here, MicroStrategy is a funky one because of the margin. It doesn't give you the best, probably not the best example here, but if I bought the 265 here at 377, I'm going to pay 167 bucks, which is going to cost me about $14,000 in margin to control 100 shares. Okay, so that's just buying the leap. Okay, if we bought the stock itself right now, okay, if I bought the stock, I'd own it. It would cost me $20,000, so it's a little bit more to buy the stock. Okay, and that's at the money right now at the 375 level. I would buy the stock. So the stock's more expensive. Okay, it's going to cost me 37,000 or something to do that versus 100, versus 16,000. But it's going to cost me more buying power. But the synthetic for this, and how we do a synthetic is we will buy the at the money call, sell the at the money put. This thing equates to exactly what a stock would look like. Okay, goes up when we go up, goes down. So it mirrors owning the stock pretty much one for one. But this is giving us the 370 synthetic stock, and this is going to cost us about 21,000 in BP as well. But what I like to do here is we can drop down. I go about 20% below here, and I would buy a long protective put. That long protective put costs us a little bit more. So now, now it's going to cost us about, $7,900. But the BP on this is only 13 because we have that protective put. So it helps reduce your BP outlay. This would be the cheapest one to do. If you pick any other underlying, let's pick Tesla right now. Same thing. Let's go out 377 days. Tesla. Okay. If we bought the Leap, okay, at roughly 80 delta, 377 days out, that's going to cost us around 7,000 in portfolio margin, but about $12,000 in cash. If we bought the stock, it would cost us 29,000 in cash, okay, which is no bueno. But if we did the synthetic, okay, it's now only going to cost us 1,700 in cash, okay, and $10,000 in buying power. So you can see by buying the synthetic, we're doing ourselves a pretty good favor. And this is how MicroStrategies, or I shouldn't say MicroStrategy, but MSTY works. When you look at MSTY, the dividend income, what they're doing there is they're doing the synthetic short term. I'll just do a 30-day. They may buy, I can't stop selling options. They might buy the synthetic here. Let's say this is at 27 days. So 27 days on MicroStrategy, the 27 DTE synthetic is going to cost me $5,800. Okay, $5.81 times 100 shares. Actually, not going to cost me that at all. So it's a pretty good opportunity. I'm sorry, $581 on that. If I had bought the leaps, oh, I'm sorry. Let's just do that again and bear with me. Okay, $5.81, what it's going to cost to buy in here, the synthetic. Okay. If you're selling like a 7-day at the money, you can take in $9, $900 on that trade. So this is how with MSTR, they're able to generate some pretty MSTY, they're able to generate some pretty decent returns overall because they can use that synthetic stock. Hopefully my examples were okay for you, but it gives you a good idea of what's happening there. So there we go. We're having a fantastic month. This month we had a great month last month. We'll keep trading, we keep learning, we keep evolving, and we're trading what we see in front of us. Have a great weekend, everybody. We'll see you guys later. Stay safe. Take care.